All right, what's going on, traders? Welcome back to another video. Today we'll be going over my pre-market analysis, my live trading session, and then also go over my overall trading month. We'll be going over my mistakes, the things I did right, and let's get into it. So starting off, looking at my pre-market analysis, we got the 30-minute chart open, screenshot I took this morning before market open, and then we also have a screenshot from order flow. So taking a look at the 30-minute chart, I noted SPY trading in a range clear area of support and demand. These will be my areas of interest. If I buy, looking to buy near supply zone, targeting demand, and if I'm too short, I want to short near demand. What we'll need is being in an area of interest plus confirmation, entry and exit, and target to have the most probability. So going over a little bit of what I wrote, the area of supply is an area where supply exceeds demand, meaning an area where buyers are looking to purchase the underlying stock or whatever it may be, product, service, real estate, cars, an area where buyers are looking to purchase at, and an area of demand is an area in which sellers an area of demand is an area in which uh, sellers outweigh the amount of supply, right? So we have the area of supply noted, areas of demands noted, and what we'll need is being in an area of an interest plus confirmation, entry and exit, and target to have the most probability. So we have our buy zone set up, we have our sell zones. I'd be looking to short if it came into this area, looking for a push to the downside. And also, I'd be looking to purchase this stock if it came into the area of demand, looking for a move to the upside, right? Because I want to put myself in the most probable, like, I want to have the most probability when I'm trading, and I want to make sure that, if I'm to buy, I'm going to buy in an area where buyers are willing to purchase the price, where they feel comfortable in purchasing, as we have circled here, and sell into an area where sellers usually step in and sell the market. So now taking a look at order flow, this is where order flow is pretty much what it shows up, and these red lines, to make it a little more simple, is the red lines that are shown yellow, even blue, anything under the traded price would be a buy limit order, and anything above would be a sell limit. So this tool shows passive participants placing their order at a certain level, looking to buy or sell the stock. These are the prices they're willing to, to get filled at, and you want to take this into consideration, especially if there's a big amount of volume. As we can see over here on this side below, it has not much volume in this area, but we start seeing more volume or more passive participants looking to purchase the stock if the stock was to go down, and we can see that in the bigger time frame over here. And then we also have some selling participants if the stock is to get up to this level. Selling participants will be looking to fill their orders in these areas and also some in these areas above as well. So that is some of that order flow. Let's take a look at the live trading session now. So this is the SPY chart. If I'm not mistaken, this is the 1 day, 1 minute. It's zoomed in. It's zoomed in a lot, but I think it ends up I think I end up fixing the screen in a bit. So So what ends up happening here is we have a big we have an aggressive move to the downside with a move up, and then it came back and is at the moment creating a higher low, which, as you know, it's a bullish indicator. It's an indicator. It's an indication that buyers are willing to pay higher prices, which is what pretty much creates the higher low. You know, buyers stepped into this area, leading the stock to make a move up, and now they're willing to purchase higher prices, which, like I was saying, it's a bullish indication. So from here, we see sellers taking control, and I'm looking to purchase the market. So what I would note here is this is near an area of supply being where buyers have previously stepped in, and I have my zone labeled out with this green line. So I'm looking to get in with a 10 cent 10 cent stop loss. So I'm giving this room to move around. I'm looking to see how this reacts based off of its, its initial bounce right here. This would be an area where buyers stepped in, broke down a bit. We're seeing if buyers step in the same area, looking to target a previous resistance level. So what ends up happening is the stock continued its momentum to the downside. Sellers completely took over it, causing me to lose this trade. And pretty much I was just looking to get in an area where buyers step in and looking along it. That initial move had more context, because we noticed a buy zone here, looking to buy in this area once it picked up a little bit on volume, and then at this point I was just chasing. I was just trying to catch the move to the upside. But as you guys can see, I think I went with double shares, double the amount of shares that I was supposed to, because that loss was double the risk. It was a $40 loss, which uh on a trade by trade basis, I'm looking to risk about $20 to make a potential of 40 if not more. But in this instance, I'm now realizing this looking back at it. I noticed I was losing $40 in the moment, but I didn't know why. But looking back at this video, I think I went double the amount of shares, which was not in my plan. It was a mistake. So um with that trade there was no context. There wasn't an area of where buyers stepped in. It was just me looking to get into it and pretty much just trying to catch the bottom, which is not in my plan. And we'll see how this goes. Looking to try it again, seeing some pickup in volume. This time we are getting a nice little wick. Looking to have a stop loss right under it, and then a target back to this area of once was supply. So get stopped at again. Now with this trade, um, I think at this point in my trading session, I was just trying to be right. I think I got more emotional than actually taking a step back and trying to be logical about the decisions I was making during this trading session, which is it's normal. It happens, and that's why I make these type of videos, to have a sense of accountability towards the things that I do, and this is why I make the these live sessions, to learn from my mistakes most importantly, and also where other people can learn from my mistakes as well. Um, so in this instance, I lost 3 trades in a row already, which if I go -60 on the day, if I lose 3 trades in a row, my my plan is to stop trading for the day, you know, because there's something clearly wrong. I shouldn't be losing 3 trades in a row, and plus that's my max risk for the day. But I kept trading. So this day, with the amount of momentum to the downside, I knew it was gonna have a nice push up. The thing is, I was just trying to catch the bottom, and I think the first trade had more context, but these next 3 trades, as I was stating, didn't have any context. It was just me being emotional, you know, trying to be right. And you see, at one point, I'm actually up on this trade. I was up 24%. I was making about $32. I think at one point I was making $40, as you guys can see. So I made up like half of my loss. I think um my entry was 74. It's at my 2 to 1, and I'm risking 10 cents. So right now this is at my 2 to 1. This would have been a perfect time to actually take a profit even at the $40 level. I mean when I was making 40 bucks. But the thing is, as I was stating, I was in a state of emotional, pretty much like an emotional overdrive. I was no longer thinking logical, and I was just investing based off of emotions. Because at the end of the day, this stock, even though it was going in my favor and I was making $44, going going, I mean, looking back at it, there is no context, there's no area of supply, and there's no confirmation, with this possibly continuing to the upside, Now, it would have been made more sense if I let it push up, it came back and made a higher low, and then anticipating a continuation. But this was just me trying to take a stab at it. I didn't take the $44, which hindsight, especially me trading emotional, I should have took that. I would have been only $40 in the red for the day, but I was looking to be patient, this wasn't the trade for it. Reason being, there's no context and there's really nothing showing me that buyers are in control of the stock. This is more like people taking profits, an area where people are taking profits, and this would have been a good scalp just for a scalp though. So what ends up happening is that trade went break even and I didn't make or lose any money. And I'm like, okay, buyers are starting to step into this area, looking to get back into this trade. I got into this trade because as you guys can see, this is an area of now but where buyers are stepping in twice. So there's more context, just like on my first trade. This one has context. Okay, so it pushed once, it pushed twice in a similar area, meaning buyers are stepping in. And this was a much better idea. At one point this was my second trade where I was up at one point $36. So I could have finished the day actually break even, not losing any money, but as I was stating, this was emotional investing on my part. This at least had more context than the first trade, the one I got here. Even though this would have been a loser, this one at least is like a better idea. There's structure to it. Okay, this is an area where buyers have previously bought. I want to buy where the buyers are buying. I want to put my stop loss under and targeting, let's say, the previous high or a higher high. And I would have had more context honestly than the first one, but I didn't take the profits when I should have. Looking to get back in the stock, immediately get squeezed out of another trade. There's no context once again here. I get back in, get squeezed out again, and then got in. Trying to be patient, trying to be patient. Stopped out again. And then ooh, okay. So that was that. That was the trading session. I think I tried one more time, but I went out for just a $12 loss, break even. And then I was looking at the puts, and this stock did end up reversing. I want to go over my month's trade now since we broke that down. As you guys can see on this calendar right here. Um, Let me see if I can open it. Okay, on the first week of trades, we took, but we'll count this as 1 week, but we'll take this as a loss. This was a losing week. The first week was a losing week. As you guys can see, I think I took 2 trades. I was able to manage it for a little less than a $40 loss on each, which was me being able to manage my risk even though I'm wrong, which is exactly how when trading it's how it's supposed to be. On this next week, as you guys can see, I made money. I took one trade and it was like my 2.5 to 1. So it was a great trade. And as you guys can see on the next day, I lost a little less than 0.5%. I made 0.5% and then made a little bit more on the third day. So on this trading week, I actually did pretty good. I went over the trades and pretty much what I found over the series of trades is that um I was moving my profit target much sooner than what I was supposed to, not letting winners ride, which was pretty detrimental to my trading this month. It was detrimental in a sense that, I'm able to manage my risks. I'm able to manage my losers. And most of the month I was able to manage the losers. Really, it was only today that, I was emotional. So out of the whole month, I got emotional one day and broke my rules. But as you guys can see, my losers are pretty consistent. They're 34, minus 34, minus 20, minus 40, minus 40, minus 60, minus 60, and then this big loser right here. So I'm able to accept the amount of risk that I'm taking. But the thing is, as you guys can see, my winners are 50, 26, 13, 40. So pretty much it shows that on my days that I am winning, I'm not taking enough trades. Like on this day, I only took one trade. On this day, I only took one trade. And they were really good trades. But one thing I gotta work on is that when I am winning, when I am making money, and I feel emotionally confident and I'm there, I should be taking on more risk and I should be taking more trades because when I do have these losing days as you guys can see here, these aren't just one trade. This isn't one trade per day. This is 2 or 3 losers. On this day I lost 3 times. On this day I lost 3 times. On this day I lost 3 times. On this day I lost like 4 times. So what I'm trying to get at is when I do make money, I'm only taking on risk once. And when I'm losing money, it's usually because I'm taking on risk more than once. So, which it in theory it should be the opposite. When I'm making money, I should be able to take on more risk, especially when I'm in a stable set of mind. I should be taking on more risk, looking to make, more profits, especially when if I have a good trade and I'm only risking, let's say, profit. I'm not taking on risk. I'm not going to be going to zero, if I keep trading. And these loser days, the days that I'm not confident, I should be stopping, let's say after two wrong trades in a row. So that's one thing I'm going to be working on for next month. The days that I am confident and the days that I am making money, I'm going to be looking to take on more risk, you know, especially in the right state of mind. And then when I'm not as confident, I'll be looking to um, risk less in a sense that I won't be changing my dollar amount that I'm risking, but I won't be taking as many trades, especially when I'm wrong. So this will be able to manage my losers because as you guys can see, if I was able to take on more risk on the days that I was making money, this losing these days that I am losing this amount, like two, three losses, it would be evened out. It wouldn't be much bigger than my winners. So I gotta let my winners ride, cut my losers short, and just try to do much better for next month. But as you guys can see, for most of the month I was making money. I was making money most of the month. It's just this last week where I got on a losing streak. I was able to manage my risk, manage my risk, manage my risk. And then today it's just I got extremely emotional and I wasn't able to handle the trades that I was taking. Um, but let's see. Yeah, as you guys can see here, so I started the month making about $1. I was making $1. At one point I was down $68. At one point I recovered and I was down only $6, $9. I went down 50, and then at one point I was starting to make money towards the end of the month, and then at this last little stretch, this last week is what kind of broke it for me. As you guys can see, I guess it was me just trying to make money or putting too much emphasis on I have to make money by the end of the month, and it caused me to create a pressure. And when trading under pressure, it in most cases it's like you don't take as high quality setups. When you're trading, you shouldn't be emotional and you should be completely stable. So yeah, I mean, we can look at a little bit of the day. But as you guys can see, my analysis for today, the reversal I was looking for on SPY was, it happened. Like my thesis was correct. It was just the timing on it. But most like half of the trades that I took should have been avoidable. It came into an area of supply. The area of supply, buyers started buying it up, which is a bullish indication. So this would have been a nice trade, targeting, let's say, prior resistance levels. So yeah. Well, this concludes this video. I hope you guys find it helpful in any way. I hope you guys learn from my mistakes, and if you guys learned anything from this video, please leave a like, comment, and subscribe. And we'll be back tomorrow.